On December 9th, 2025, during the trading session, the biggest mystery around Coinbase and ticker Coin suddenly moved to the center of the story. Reports said that PNC Private Bank opened direct spot Bitcoin trading for clients and that the underlying infrastructure was powered by Coinbase Crypto as a service. That sounds straightforward, but the part investors actually need is still not clear. The revenue split, the ongoing fee structure, and the scale of recurring income are not spelled out in a way that can be modeled with confidence. When the event is obvious, but the economics are still blurry, price action starts to run on competing assumptions instead of verified numbers. This is why the market can treat the same company like two different businesses at once. One crowd still frames Coinbase as a cycle-driven exchange that benefits when crypto activity rises and suffers when volumes fade. Another crowd is trying to reprice it as a financial infrastructure provider that can earn steadier, repeatable service revenue through institutional rails. If those narratives collide, intraday swings stop looking random. They become the visible trace of investors trading probabilities, not facts. To understand why this particular PNC headline matters, it helps to remember what is normally expected from a bank. Banks typically roll out high-risk products slowly, with heavy compliance review, conservative risk controls, and limited pilot access before broad expansion. Spot Bitcoin access inside a bank experience is not the most common first step, especially when regulatory interpretation can shift. So, when a bank moves from concept to client availability, it can imply that internal governance has advanced to a point where the institution is willing to stand behind the workflow. It can also imply that the partner infrastructure is considered mature enough for bank-grade expectations, like security, audit trails, and operational controls. If that is true, then Coinbase is not just selling trading to retail users. It is pushing into the role of a regulated world backbone. But this is where the mystery becomes fundamental. The headline says the door is open, but it does not tell you how much flows through it, how pricing is structured, who captures the margin, what costs Coinbase absorbs, and where liabilities sit when something goes wrong. Those details directly shape long-term earnings quality, and without them, investors are left building scenarios from fragments. One plausible view is that terms are confidential and deliberately kept quiet because they affect negotiating leverage with other banks. Another is that early access is narrow, so the initial contribution may be modest even if the strategic value is huge. Another is that monetization is split across multiple streams like custody, infrastructure usage, and service fees, which makes a